Weren't they last night in a lot
it.
of ways? I mean, it's almost like a lot of people came on yesterday and said, well, if Apple has a gigantic quarter, then maybe that does tell you the consumer's a little bit stronger than we thought. You don't think so?
Quite frankly, I do not, because I think Apple they have their marketing premium built in, and they're always going to be on the forefront as far as leading any type of retail charge, and the premium that they've built in is fantastic. However, I almost think that they've created such a brand for themselves that they're almost quasi-independent of the current macroeconomic trends with the retail sector specifically.
Is it sustainable?
Steve is going to have to keep on taking the envelope and pushing the envelope further with Apple because, as you saw with the iPods, that's one of their lagging products. And so, as you saw, signs of decline. And they'll continue to decline in their product segments unless they continue to redevelop themselves and reinvent themselves moving forward, which they seem to have no end to thus far.
All right, Adam, thanks a lot. We're going to talk to you a lot over the course of the next couple of hours. A lot of energy.
I'm here for you.
At 2 o'clock in the morning. Very good stuff. Better than us at 5 o'clock in the morning. All right, we've got a lot of other earnings reports coming out throughout the morning as well. And let's run through
financials. We're going to keep an eye on Morgan Stanley. Morgan Stanley out with news last night that it's selling its retail and investment management business for $1.5 billion. Asset manager Invesco buying that unit, which already includes the AIM and PowerShare funds. The deal will give Invesco another $119 billion in client money. As for Morgan Stanley, that move gives them some cash. Plus, it comes after the creation of Morgan Stanley Smith Barney. Now that unit's advisors can recommend funds without a potential conflict of interest.
All right, instant audit from Adam Connors, who joins us once again, C.K. Cooper's Director of Corporate Finance. He's made it to 2:30 in the morning out in California. And, we could talk. What about this deal here from Morgan Stanley, kind of unwinding another business and selling it off? What do you make of it?
Well, it's actually it's upsetting to see, growing up and seeing all the big powerhouses and the big names that are the conglomerates that have all the different industries, and watching my parents and grandparents all have a part of the retail sector. But the volatility in the market right now is just going to happen, and so you're going to see a lot of shifting, a lot of things sift in the pond there while things settle out, and so. It doesn't surprise me. We'll see more things like it, and Invesco is just poised to be able to move forward.
Well, the question we ask with some of these stories is what is the message that we can take away from them? And as far as this story, many were expecting that a sale like this was going to happen. But is this a sign that some of the biggest financial firms in this country still need cash?
It's interesting because, yes, they do need cash in particular respects. However, it's interesting to note that Morgan Stanley is still one of Invesco's largest shareholders. Actually, I think their largest shareholder, just under 10%. Yep. And so they're actually able to participate in the upside of that business with Invesco growing their retail side. So, of course, they did realize a cash gain on this, but they are going to be able to realize the upside as Invesco grows that unit as well.
That's a good point. You combine it with the Smith Barney news, and there you have it. And good manners and everything. Adam, thanks a lot. We'll talk to you again in a few minutes.
I'll stay awake.
In L.A. Good stuff.
We hope he stays awake. You're going to need him to weigh in on our next interview. Well, investors are pulling out of the hedge fund Galleon after its co-founders were arrested. Rajaratnam arrest on insider trading charges led investors to try to withdraw $1.3 billion from the fund. This, according to the Wall Street Journal, obviously just happening since the arrest on Friday. That's about a third of its total assets for the fund. Rajaratnam was back at work yesterday telling the firm's employees he did nothing wrong. Again, this is according to the Journal. And apparently he said business as usual as he continues to fight some of these charges. For a look at what this means, Adam Connard is joining us from C.K. Cooper this morning. Adam, what do you make of this as far as seeing that type of money come out of a fund? Can that affect volume of trading? Can it affect any of our own investments if it's one big fund that's essentially trying to purge itself if you're a part of that fund of your holdings there?
Yeah, absolutely. It definitely can affect things because what happens is that when you're having redemptions, you're going to have liquidations that aren't exactly efficient and massaged within the market, and so it's more of a fire sale in the market, and so you'll be hitting the market transactions, and you won't necessarily get the best prices, and you'll see increased volatility, which makes for the most efficient market.
And we see some of the smaller technology stocks that this fund owns were down yesterday in an up market, whereas some of the big ones like Apple and Google wouldn't be as affected by something like this as some of those smaller ones would. Now, that said, Adam, the other thing that's happening is some of the broker-dealers, I mean, Bank of America and Barclays, I think, were the two so far, said, hey, we're not doing any trades with you guys. So are they going to have anybody to trade with after a few days here?
They'll actually find someone to trade with. The problem with these is that everyone's very hypersensitive to issues like this. And so even though Raj obviously says he's not guilty, he's going to fight it till the end, unfortunately in the markets, the way that they play it is it's guilty until proven innocent. And so that's unfortunately the impedance that he's going to have to.
Isn't that the way you'd play it with your money? I mean, it's your money on the line. If you have any doubts, better to get out than to hang around for something to completely blow up?
Absolutely, and you'll actually see that, and I can definitely be empathetic with anyone that's an investor in the fund. Sure.
As far as the state of the hedge fund industry overall, this obviously is not great press.
No.
What do you think is the way that this industry is evolving as we now are a year away from the financial crisis? Where do you see it going for the next year? How do you see it evolving?
Yeah, what you'll see is you'll probably start seeing more specialized funds that more sophisticated investors are going to be able to target and manage their allocations in more targeted funds. And it's still going to go back to the relationships and everything focused upon when it comes to hedge funds as a whole. So the hedge funds aren't going to go away, but there's going to be more transparency, there'll be more regulation, and there'll be more, in effect, better chances for hopefully these things to be spotted in the future.
Yeah, and you know, spotting in the future is one thing. What's your take, by the way, on the whole insider trade? This is a big discussion we had yesterday in terms of what the fine line is between trying to dig for information and actually having a case of insider trading. It seems like in this case, if the allegations are true, this is clear. But is that a difficult line to judge sometimes, or no?
It is a very gray area. Unfortunately, at Galleon, they're known, and some sources have said that they're known for their aggressive information tactics. And so. Right. What that means is that, I mean, there are people that actually will go out, and hedge fund managers, directors, PMs, and analysts, they'll go out and they'll actually call any type of firms, partners, investors, vendors, to try and get indications of what the company's doing, what the sentiment is, to even to the fact of, you know, was Mr. CEO, how was he feeling today? Right. And so there's obviously going to be a gray area in some of those instances, and so it's going to be a fine line, and it's going to be carried out within the court case on what actually is inside information, what's not, and that's going to be a struggle we'll have for the indefinite time.
Yeah, it's all right, Adam. Thanks a lot. Adam Connors out in California will join us in the next hour on our internet show at foxbusiness.com. So thanks a lot, Adam. We appreciate it. The Market Mover.